Hello and welcome back to the UK SIF Leadership Podcast. It is May 2024. I'm Liza Hartley, Media Manager at UK SIF, and this podcast will look at the sustainability challenges facing the UK's financial services. In time for our annual spring conference up in Edinburgh, we at UK SIF have just published the final report in our 4-part Financing the Future series, looking at the state of the UK's financial services industry from fiduciary duty to disclosures to transition plans and the barriers holding the UK back from taking up a leadership position. Today, we are hugely fortunate to be joined by Mark Manning. Mark has previously held various senior policy and research roles in central banking and securities regulation with the Bank of England, the Reserve Bank of Australia, and the UK's Financial Conduct Authority. Mark is also visiting senior fellow at LSE's Grantham Institute on Climate Change and the Environment. Mark, thank you so much for joining us today.
Delighted to be here.
And also with me is Warwick Thompson, Head of Policy and Regulatory Affairs at UK SIF.
Hi Liza, great to be here again on the podcast.
Fabulous. Let's kick off with the big picture first. The UK was once a champion for sustainable finance, playing a pivotal role in securing $130 trillion, roughly 40% of global assets, committed to net zero at COP26. However, recent policy shifts and a lack of clear regulations for sustainability disclosures threaten this leadership. Investment groups managing £1.5 trillion in assets have warned the UK government that its actions risk undermining confidence and blurring visibility for investors, potentially derailing the significant green investments needed for a successful transition. Why is the UK's leadership in sustainable finance at risk, and what's at stake if we lose out? Oscar, can I begin with you?
Sure, thanks, Liza. I think it's really important to note that we shouldn't take this leadership position that the UK currently has when it comes to sustainable finance and sustainability at large. And the purpose of the report is really to set out a few recommendations that can help enhance that leadership going forward. It's not the answer to everything, but we've got 3 steps that we think policymakers and regulators could take in the UK to enhance that existing position that we have. In terms of your question, Liza, some of the reasons that we've been lagging behind, I think one really key one is looking at the conditions in the real economy, and we've seen this wavering on net zero policy making from the current administration in the last year or 18 months that you've alluded to, Liza, in your introduction. All of this has created uncertainty for investors in terms of where can they put their capital to work that can both deliver on their clients and their own climate change and net zero objectives, while also delivering strong and stable financial returns in the long run. There has been this blocker, I think, in terms of pools of private finance and capital going towards sustainable projects in the UK. And that ultimately stems back to this uncertain environment for net zero policy in the UK. So essentially what we're talking about here is action on the financing green side of things. So how do we unlock that capital and how do we actually create that pipeline of net zero aligned projects that we think are lacking in the economy at this point in time? Absolutely, there's a point around financial services regulation, and here we're talking about in our report around sustainable finance regulation. That's really important for a number of reasons. It's about It's about addressing greenwashing risks in the marketplace. Today, it's about promoting that market integrity and also providing a bit of more transparency to investors in terms of those sustainable investments in the economy today. We've seen, little progress, I think it's very fair to say, made since the Greening Finance Roadmap was released by government in 2021. And we saw last year's Green Finance Strategy Update as well released. And again, very little progress made on things that we need to see, like the taxonomy, transition plans, ISSB, and the wider sustainability disclosure requirements regime, all really important pillars of the UK's sustainable finance regulatory framework. We need to see these building blocks in place as soon as we can. And then following that, there's probably a piece around how do these different regulations interact and support one another, and what's the international dimension as well? How do we get that compatibility with other rules and approaches going forward, which I think we'll talk about in a bit. And then, one other reason I think for our leadership lagging behind it, if I may very briefly, is I think there's more to be done on wider sustainability factors. So we talk about in our report around nature and biodiversity, and also social factors as well, which I think are increasingly being recognised by our members as financially material to investments.
Brilliant. Mark, can I bring you in?
Yeah, absolutely. So I think there's a really important role here for government, not just in the UK, but globally, to take leadership here. The UN was very clear at COP28 last year that we're well off track when it comes to achieving the goals of the Paris Agreement. And the Intergovernmental Panel on Climate Change has been very clear that on current policies, we're heading for a 3-degree world.
Yeah.
And make no mistake, a 3-degree world is a pretty devastating scenario for humanity. Much of the world would be uninhabitable from a financial services or economic perspective, uninsurable. So the human and economic cost would be pretty catastrophic. We'd be looking at mass migration. We'd be looking at geopolitical tensions. We'd be looking at food insecurity. Basically, a breakdown of the economic and financial system as we know it, and just devastating societal costs. So people are starting to wake up to the implications of these real world scenarios. I mean, we've had some fantastic work coming out of the University of Exeter on this over the last several months. And with warming records tumbling pretty much daily at the moment, and parts of the world on fire, and even Dubai underwater a couple of weeks ago, people are sort of waking up to the fact that this isn't just a future risk. This is a now risk, and these are truly systemic, and that means that governments need to step up and take leadership. We need governments to define clear pathways for accelerated action. We need to have governments determine how we're going to see the scaling in the deployment of what are currently emergent technologies in some cases. And all of this, I think, needs to be brought together into the form of a strategic national transition plan. Part of this will involve joined up policy across government, creating the right incentives, truly homing in on how behaviour can be shifted across the financial services sector, across the corporate sector, and in wider society. And we need commitment of targeted public money, because that's what's going to ultimately catalyse and unlock private capital at the necessary scale. But I think we're not currently seeing these risks being adequately priced into markets. So another important role for government is sort of smoothing that repricing, or else the financial instability that could result would be itself incredibly damaging. So the UK and governments around the world have a massive opportunity, not only to show leadership in domestic policy, but also to come together internationally. And this needs to be a collective effort across government and the private sector. We need the likes of asset owners and insurers to step up too. Universal asset owners in particular face undiversifiable risks. They need to be taking decisions not only at the asset level and the portfolio level, but also at a systemic level. Sure. And they need to be managing the future exposure of their portfolios by cascading expectations among their investee companies, thereby accelerating climate action across the economy.
Wow. I mean, okay. A lot to digest there. There's definitely a few key questions swirling at the moment around the idea of, well, more regulation, more data reporting, more work for FS professionals. Yeah. Meanwhile, obviously, money's global. We talk a lot about interoperability. On the one hand, it seems like people are calling for less regulation. On the other side, it seems like more. Set out for our listeners, if you can, how does the UK establish a leadership stance that we've been talking about, but also maintain interoperability? Who'd like to take it first?
Yeah, I'm happy to go briefly.
Oscar?
I know, Mark,
Sure.
this is very much an area for you at the moment, and we've touched on it already. But I guess in terms of what the why of this question, this is very much front of mind for UK SIF and our members, and would often say to policymakers and other stakeholders, as much interoperability as is possible. It's never going to be 90%, 100%, but let's try and get as much as we can. And we talk about interoperability, that's really compatibility across different disclosure standards, different rules. In the marketplace, particularly important, as you mentioned, Liza, for our members who are internationally active firms and operating across many different jurisdictions. To bring it to our report that we've just released, we did some survey of financial institution leaders, and really interesting, 73% of those UK financial services firms that we surveyed agreed very much that regulatory divergence on sustainable finance is a big challenge for them. So I think that just demonstrates the scale of the challenge for firms. There's a cost issue for sure for them, but also I think there's a real issue fundamentally for clients and customers, and how can we make sure that consumers across many different markets are receiving the fair treatment and very similar types of disclosures for their investment funds, for example, no matter where they may be based in the world. Very briefly, if I may, in terms of solutions to the issue of interoperability and regulatory fragmentation, we talk about in our report in terms of the UK's role in more actively participating in international fora to shape approaches to regulation. So we talk about being more involved and building off our role in groups like the International Platform on Sustainable Finance, the G20's Sustainable Finance Working Group, and also IOSCO's Sustainable Finance Working Group that I know the FCA is already involved in. The Financial Stability Board is another we cite in our report where the UK could perhaps look to be even more involved than it is at the moment. We also talk about in our report this idea of a new sustainable finance regulatory convergence task force, and that's something that the Global Sustainable Investment Alliance, GSA, has endorsed. It's really interesting to think about, what could this task force do? Could it play that role in terms of trying to bring about harmonisation of all these different rules that are very confusing to many of us in the industry and elsewhere? Or could this role be fulfilled by an existing body such as IOSCO? So yeah, that's a slightly unanswered question that we throw out there in the report. And there's also bilateral engagement that I think the UK can continue to do to maintain that, to enhance the interoperability among standards with jurisdictions like the EU, and we're seeing some of that taking place perhaps in regards to the SDR regime and the EU's SFDR.
Mark?
Yeah, let me look at it from the sort of foundational standpoint. When it comes to disclosure, corporate reporting is that critical foundation, and I think that's an area where we have seen tremendous progress globally in the past few years, most notably with the work of the International Sustainability Standards Board, which has developed what it refers to as the global baseline for reporting on sustainability, a common language for companies to tell their sustainability stories. And once these standards are embedded across jurisdictions globally, in legal and regulatory frameworks globally, connected with the financial statements, that source of information can cascade through the system in a manner that is consistent, is comparable, is reliable. And in so doing, it can inform portfolio and lending decisions, it can inform the design of financial products and onward disclosures by financial services firms to their clients, to their consumers, and in relation to their financial products. So that fixed point, I think, is very much a key. If everyone's keying off of the same ultimate source of corporate level data, we can get a common fixed point for professional services firms, for the capital market ecosystem of data and analytical tools, and ultimately we all build around that same base. So it will avoid the need for interoperability because we'll all be keying off of the same data. But obviously we've got a fair way to go with that. The ISSB standards are currently being adopted in a number of jurisdictions. The IFRS Foundation has a repository of adoption consultations on its website. I think last count around 16 jurisdictions consultations included there. In the UK, obviously we've seen the UK as a strong supporter of the ISSB since before its inception, back at COP26. Last year, the government set out a process towards endorsing the standards for use in the UK, and the FCA set out a bit of a roadmap there. Accelerating that process is critical, and once we have that in place, it will be a massive step, not only for our markets in the UK, but for UK leadership internationally. And let me just talk about the one other critical milestone here, which is the transition plan piece of it.
Yes.
The work of the transition plan task force to develop a disclosure framework for credible transition plan disclosures, again, has been a critical milestone. that disclosure framework was developed in a way that can hook into the IFRS sustainability reporting standards and essentially be applied internationally, not just in the UK. And again, once we have that as part of the regulatory framework, which the FCA has signalled an intention to work towards at the same time as implementing the ISSB standards, we'll have forward-looking information that can be tremendously impactful. Investors need this information to assess whether the companies that they're investing in will still be here tomorrow in a decarbonising world, and ultimately it can unleash new forward-looking data and rating services, underpin credible transition finance, and again be something of an unlocker. So really, really important stuff there. But I think we need to understand and acknowledge that disclosure is necessary but not sufficient. So all of those points that I was making earlier around, government leadership and regulation, tremendously important, because we can have the best disclosures from companies across the economy, from FS firms in relation to financial products, but they're only going to change behaviour if markets and consumers act on that information, and if they have the incentive to do so. Corporates will only act to mitigate the risks that they identify in their disclosures or capture opportunities if they perceive that the market's going to reward them, or consumers are going to reward them, or the government isn't going to punish them. So, these are really important complements to a solid disclosure foundation.
Right. So disclosures is the kind of groundwork from which then regulation builds.
Indeed.
Good. Okay. I mean, I think we've actually covered off probably two questions there in one go, which is great. But let's change direction a little bit in that case. I'd like to bring us onto fiduciary duty, particularly the fiduciary duty of pension schemes, because it's been a really interesting year in the UK for that. For anyone unfamiliar, fiduciary duty is the obligation to act in another party's best interest. So in the case of pensions investors, that's the legal requirement that trustees, to the best of their ability, do what's best for the interests of their clients, the beneficiaries. Now, there have been question marks for some time now over whether climate change and sustainability concerns are material in this, and if so, to what extent they need to be considered. Mark, Oscar, how does clarifying fiduciary duty for pension schemes benefit investors?
Shall I kick
sure,
off? I think the work of the Financial Markets Law Committee is tremendously important.
Yes,
I really, really do. I see this as quite a critical unlocker. For me, it removes any remaining doubt for pension scheme trustees that systemic climate and sustainability risks need to be taken into consideration in meeting their fiduciary duty. So it really empowers trustees to bring these considerations centrally into their decisions. The FMLC work emphasises that systemic risks are not diversifiable, and therefore steers trustees firmly towards taking a systemic perspective. If I may, I'd just like to read out what I see as one super powerful passage in the committee's paper.
Yeah.
So they say, whereas some wider economic or systemic climate change related issues may have been characterised as too remote and insubstantial in the past, pension fund trustees will need to reappraise this in a context where, for example, physical transition and litigation risks are now apparent and material. That's a call to action if I ever heard one. And that's why, right at the start, I called out asset owners as being a massive unlocker for accelerated climate action. If trustees take this truly into account, that can really cascade expectations right across their universal portfolios in many cases, and and drive change across the system.
Well, the question has been, hasn't it, whether a law change is necessary, and the power of this paper, as I think as sort of we see it, is that the law works at the moment. It's fit for purpose if there is a sort of significant shift in what is deemed acceptable, responsible, what is financially material. And this has the power to change that precedent, which is the important thing in law, right? It all operates off precedent. And so if you have a consensus that, yes, this is financially material, no, you cannot diversify your portfolio beyond the risk of climate change because it's systemic, it changes everything. If that becomes the accepted normal behavior for fiduciaries, that's really powerful.
Absolutely.
And I think we're getting there, but I guess to Mark's point, I totally agree. Like clients and asset owner clients, among others, do need to be more vocal in expectations of their fund managers and others who are, investing their money for the long term.
Right.
I guess to bring it back to the FMLC's report, I absolutely agree with you. It is, I think, a step change in the interpretation of fiduciary duty. It's very much, we welcome this at UK SIF. I guess the caveat to that is that, they've been very clear that it is not, it is not a formal legal opinion per se.
Right.
And really we think to take this conversation forward, to take forward the recommendations, it needs really regulatory intervention, is our view. And in the first instance, that means the pensions regulator, TPR, coming in with fresh clarifying guidance to trustees to really take forward many of the important conclusions from the FMLC. The FMLC is very clear and says, this cannot be relied on trustees going forward in terms of their interpretation of their fiduciary duty. So that's something that we want to see happen, and we'll definitely be looking to work with the regulator and others to get that guidance out there in the market. And would agree with you, Liza, to your earlier point, it's not really a case about legislation today, it's really about the interpretation of fiduciary duty, and we're seeing mixed interpretation in terms of the current duties among pension schemes in the market today. To highlight a kind of stat very briefly from our reports, we found that 72% of senior decision makers working in large financial services institutions said that the clarity of fiduciary duty in relation to sustainability factors for trustees would help them in making investment decisions. So to Mark's point, I think it is very much has been a key blocker in terms of this lack of common understanding on fiduciary duty among trustees. And perhaps if we can get this right with guidance from the TPR, can this help address in part the risk-averse attitudes we see from some schemes who may not be looking to invest in certain things in the economy? And also, can we get some clarity in place over different investment approaches for trustees and also beneficiaries that can deliver good sustainable returns in the long run, but also contribute towards positive environmental and social outcomes?
I know that we could talk about this for a bit longer, I know, but I want to bring us onto another piece here of this enormous puzzle, which is TNFD, nature, biodiversity loss. That's in the mix with all of this, and it feels like our industry has really woken up to nature and biodiversity loss in the last few years, and it's about time too, right? 50% of, or 34.6 trillion pounds of global GDP is highly or moderately dependent on nature. I'd love to hear from you both on where you think we're up to here. Why has it taken us a bit longer to assess nature loss compared with, say, climate change? And what are the next steps we should now take to mobilise the UK financial services sector to mitigate it? Mark?
Yeah, absolutely. I'm glad you've sort of shifted the conversation towards nature, because you're absolutely right. We're playing a bit of catch up here. I would say there are perhaps three main reasons why progress has been somewhat slower on the nature and biodiversity side. First off, many of the tools were developed first for climate change, and so it is now somewhat better understood across the system, though, as we've already discussed, perhaps still not sufficiently in order to deliver the action and the repricing that we need. I guess the second reason would be the multidimensionality of the issues in the nature and biodiversity space. So, water, deforestation, soil health, biodiversity. The list goes on. Yeah. So that makes it more challenging, I think, for a non-expert to fully engage. And then layer into that the interactions between climate, nature, and social issues, and one's head starts to hurt. So it takes more effort, more resource to wrap one's arms around it. And that leads to the third reason, really, which fundamentally is bandwidth. At the moment, it's typically the same people within an organisation that are thinking about both. And expanding teams, assuming that the expertise even exists, is costly, which then takes us all the way back to the questions around incentive and reward for making those investments in capabilities. So back to where we were before, that you need to create the incentive, you need to demonstrate why we need to act and act immediately. But the GFI's research, the Green Finance Institute's research, provides a very compelling evidence base for why this is a real and present risk for the FS sector and for the economy, and why we therefore need to step up. I mean, you highlighted some stats there at the outset, Liza. I mean, there are other really striking headlines from the GFI report around, nature loss potentially leading to a 12% drop in UK GDP, a 4 to 5% value loss in some banks' lending portfolios. So it brings it home.
They make
it really
the
brings
comparison
it home
to the 2008 financial crash.
Exactly.
And it's because the figures are that stark and sort of that alarming. It might not be that quick, right? It might not be overnight. And yet the loss potential is really there. Exactly.
I think, again, the glass half full perspective here is that TNFD have developed a fantastic set of tools and resources that can really help companies get started and accelerate progress. And, of course, a couple of weeks ago, the ISSB agreed to consider biodiversity ecosystems and ecosystem services in a research project as part of its agenda, and in doing that, it will draw on existing content, including from the TNFD. So, I think we've started to move, and we've got a really solid base to build on from the fantastic work that the TNFD has done.
Yeah. I mean, and certainly agree with your comments, Mark. We are very much behind in terms of addressing nature-related risks, and also the opportunities as well, for the reasons that you cite. And I guess another reason is this kind of, to add to those you noted, is I guess this lack of recognition perhaps among different stakeholders on the financial materiality of many nature risks and opportunities. I think the GFI report provides that evidence base for action, and we need to move really quickly now to address this in tandem with the climate crisis and other factors, of course. In our report that we released, we talk about disclosures being a really important part of addressing the nature part of it all, but that's only really a starting point in our view. In terms of more specifically around disclosures, absolutely, let's take forward the TNFD framework that was been finalised towards the end of last year, and let's perhaps consider taking this forward through a fresh standard from the ISSB, so a so-called IFRS S3 it's being called, but also there'll be other steps to do beyond disclosures as well. There's the role of investor stewardship, I think, as well, that could potentially be really powerful, so really making sure that investors are exercising stewardship as a positive lever to engage with companies and encourage them to manage nature-related risks and opportunities. So, for example, encouraging companies to disclose their policies around nature, and that could include their exposures to deforestation risks and impacts as well. There's the kind of disclosures, the stewardship piece, and also there's the kind of wider policy making environment as well. So, for example, in the UK in the last few years, you had the Dasgupta review on economics of biodiversity. It was a really seminal intervention, I think, there. But really, unfortunately, we haven't seen policymakers in the UK take that forward. Our concern is that continues to gather dust on a shelf of whichever government department it's in. I think it's in HM Treasury. So yeah, how do we take forward some of those recommendations from the Dasgupta review, and how can we create some crunchy, actionable recommendations for the financial services and business community in particular?
Thank you both very much for those responses. I'm afraid we have reached the end of our time. Thank you both so much for your insights. Particular thanks to you, Mark, for joining as our guest. Our financial services report can be found on the UK SIF website and on our policy page, but I would also recommend for everybody listening to this to go and read the GFI report that we've mentioned as well. It's fantastic. Thank you to everyone for tuning in. Remember to like and subscribe for more episodes and UK SIF news. You can find us on LinkedIn or Twitter at UK SIF. I hope you have a lovely rest of your day. You'll hear from us again very soon.
Great, thanks, Liza.
Thanks so much.